we like companies like ALQ, which are going to have a boom in earnings over the next few years as all the gold miners get out there and drill. Hey, gold at 5,000 Aussie or 3,500 US, let's drill and build up our resources. So they're going to have a great time. And we're structurally bullish on gold still on a 7 year outlook. Blue Scope, a little bit of negative earnings to come, but it's got great earnings revisions. It's got a great business strategically in Australia. Strategic steel manufacturing onshore in Australia, but also their North Star asset in the US is very good. And this company is really cheap versus where US steel companies play. So we think, if the company like that gets too cheap, we think ultimately it gets taken out or split up into its Aussie business or US business sold. So there's a lot of ways to extract value there. So I've got plenty more I can go into. We've got some small caps ones if you want to go there later, but I'll leave the large cap ones at that.
It'd be good to just unpack your view on gold a bit more. It's always an asset class that gets a lot of attention in the basis points community. So what's the view long-term that you guys hold, and how are you, I guess, structuring the portfolio, or what positions are you thinking about to take advantage?
We got 60 minutes more because I could probably go on a topic close to my heart. But, as many of your listeners will know, and you'll know yourselves, for the last sort of 20, 25, 30 years, gold's really been an inverse play on interest rates, or more precisely, real interest rates. And people would love to show this correlation of inflation-adjusted US nominal bond yields, and how gold will follow that. Gold will rally when real rates go down, and it'll fall when real rates go up. And the logic to that is the opportunity cost of holding gold is what you can get an inflation-adjusted risk-free rates. But, you've got to be careful thinking that's always the case, because there'll be some tie to that. But what's happening now, and people are waking up to it, is there's one, a change in global geopolitics, and there's two, a sort of changing beginning in the global monetary order. So remember, one way or another, gold is effectively the reserve currency of the modern world for the last 300 or 400 years. We go back far enough, and the reserve currency is the British pound, backed by gold, and then it was the US dollar, backed by gold. At periods of time it was Spain or Portugal, backed by gold. So the only time reserve currency has not been backed by gold is from the 1970 sort of 1980s onwards, in the last 50 years, with gold's when the US sort of removed the tie to the gold standards, and the US dollar has been a reserve currency on its own right. Now, one is the war with Russia and Ukraine, and seeing Russia's FX reserves in US dollars and euros effectively become worthless overnight, is given the central banks around the world, particularly those that may not feel allied with the West, hey, we should increase our gold reserves. So China's buying huge amounts of gold for their reserves, and among others. And secondly is many investors in the world, central banks and non-central bank investors, are looking at the US fiscal deficits of 6.5%, the growing debt, and saying, I want an alternative, or at least some of my savings an alternative. So these are big structural issues. The tensions between the Western world, US-led, and Russia and China is unlikely to be resolved structurally. There'll be times where it backs off, but these guys are going to be aware of each other. And also the US seems to have no ability to rein in fiscal spending. So we think gold can continue to do very well over the next 5 years, until whatever fiscal deficit, devaluing of fiat currency, inflation that the US is creating, until that's resolved. We think dips in gold are there to be bought without giving investment advice, but that's the way we're looking.
No. Well, no, everything here is general advice only. Will's not aware of your personal financial circumstances, but yeah, gold is certainly a fascinating topic in the equity mates and basis points community at the moment. And if you're saying the sell signal is when the US gets on top of its debt, well then it might be a structural bull run for a lot longer.
That's right. And, gold went up, I can't remember, 1,600% or something in the 1970s. I'm not saying we can go up 1,600% in this time, but, and then it collapsed in the 1980s when they got on top of inflation. After Volcker came in, they finally got on top of it. It collapsed. So, but you could have the same situation here. Gold goes up far more than anyone can conceive. And then one day, the US or the global monetary order finds a new system, and it could collapse 70-80%. But we're not. I don't think we're there yet.
up 1,600%, down 70 or 80%. You're starting to sound like you're talking about Bitcoin.
Yeah, well, yeah, crypto is another topic, but they'll likely be fairly correlated. Crypto is probably a higher beta version of gold, but this, it certainly plays into the hands of the crypto bros. This sort of
Yeah.